to share with you why real estate may be even better than investing in stocks. Why is that? The fundamental difference in real estate investing when you buy a house is that you're able to use a little bit of money to secure a lot of money, right? So let's take this house, for example. Let's say it's $200,000 house. And you're gonna use this as a live-in rental, and you're gonna secure this asset for 5% down because you tell me the banks, I'm gonna live here for at least 12 months. So what's 5% of 200,000? $10,000. Okay, so the beauty about real estate is that, again, you lever up with money. So you now control this entire asset as an appreciable asset, and it's going to drive over time your net worth. So let's look at the difference as if I took this $10,000 and dumped it in real estate for a year, or took this $10,000 and dumped it in the stock market and made average market returns. So if you look at the median appreciation for housing, it's roughly 4.5%. Let's call it 5% just for ease. And again, this can be even higher if you invest in prime markets, where places like Texas, Florida, right? These are places that are seeing economy growth, and that's going to drive real estate values. So again, this is the average. You could even get better than this return. So let's say you bought this house for a year, you left it and you started renting it out, you're cash flow positive, and let's see what that does. Okay, 1 year of that $200,000 house is going to give you $10,000 of capital, right? Because 5% appreciation of $200,000 asset, your house in 1 year's time is going to be worth $210K. Okay, so that's a delta of $10,000. Okay, let's say, hey Doug, I don't like real estate. Real estate's for, you're gonna have to deal with headaches and you have to replace roofs and things like that. Okay, we'll put that in the stock market, okay? Let's say you got a 10% return because you were a good investor, you put in the S&P 500 or GameStop nowadays, and you made 10% on that money, right? What's 10%? You move the decimal over. You made $1,000 on your money. There's a $9,000 delta between what you made in the stock market versus what you can make in real estate by just letting homes do what they do. Because as the government continues to print out money and devalue currency, and we're going to see inflation, that's just going to drive up the prices of real estate significantly higher. And again, it could force more and more people to rent. So it's even better to jump into real estate and actually invest and hold these assets long term, because the way our government spends money and the way they actually look after capital and fiscal policy is going to just help real estate investors and people who own single family residents in particular. And this is going to continue to happen because families are going to continue to be created. They're going to look to go from apartments to houses. And as long as you're in a good area that has significant job growth, it's a no-brainer. So there's a massive difference here. So that's why you want to diversify, right? Stocks aren't the only way to make money. You can actually accelerate your investing career and your net worth and get to that next level of wealth in your life by being a disciplined investor and looking for the right real estate assets.